So we talked about this multiple times on the channel. Shares like GameStop or AMC Entertainment recently jumped massively in price and volume due to the phenomenon called a short squeeze. And we're talking about a crazy 2,500% on GameStop or roughly 900% on AMC. That means that if you put only $1,000 into GameStop before the short squeeze, this initial investment would now be worth $25,000 after a period of just a few weeks. So just imagine knowing those stocks before the extreme breakout. Well, we went through Reddit and listed the top 3 so-called meme stocks with enormous potential for you in this video. But before we jump right in, just make sure to hit that subscribe button down below. If you never want to miss opportunities like this, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Okay, without further ado, let's start with the first stock, BlackBerry. Yes, the name that started the smartphone race a couple of decades ago is still around, but it doesn't make mobile devices anymore. Rather, BlackBerry is now a software company with a strong focus on security and automobile connectivity solutions. Last fiscal year it did about $1 billion worth of business, improving a bit in the prior year's top line. Revenue isn't the same as profit, though, and there's the rub. The company's been in and out of the black since 2012, when its smartphone business peaked, and it began to morph into the software organization we know today. It's shown just enough promise in the meantime to justify remaining in business, but not so much that onlookers have been confident in its survival. If you look at the current chart, however, you'll quickly notice a huge breakout of nearly 500% in January, as the stock got a lot of traction in forums like WallStreetBets. And the great thing about this actually is the pullback out of the really overbought levels afterward. So while breaking out of the descending pullback pattern, as of right now, it might be the perfect time to consider buying some shares at a cheaper price. But let's continue with the second stock, Palantir Technologies. And while BlackBerry may be a familiar name to investors, the relatively young technology outfit Palantir Technologies probably isn't. In simplest terms, Palantir helps enterprises do something constructive with the mountain of digital data they're sitting on. From automobile makers to insurance companies, Palantir's tech allows customers to turn information into an action plan. So while it's a relatively crowded field, it's also a relatively young industry with room for massive growth from many players. Analysts estimate revenue will grow by more than 30% this year and next, driving similar progress for its bottom line. Worldwide data management revenue is projected to grow at a decent double-digit percentage rate for the next several years too, lifting Palantir Technologies' results with the rise. It all sounds great. So why all of the debates online? Well, most of the chatter is actually positive stuff, with traders cheering the company's growth prospects. Naysayers typically point to its outrageous valuation. Shares are trading at nearly 200 times this year's profit projection and more than 24 times the company's trailing sales. That makes it a fairly easy target for value-minded influencers. Alright, let's now come to the last one. And this stock is absolutely crazy. We're talking about Taiwan Semiconductor Manufacturing, or TSM, on the New York Stock Exchange. So finally, add Taiwan Semiconductor Manufacturing to your list of meme stocks that are more than the butt of a joke or a mere short squeeze candidate. This $550 billion behemoth is another richly valued name. But stock trading communities discussing the company on Reddit, Twitter, and other online venues are buzzing about the fact that this company is in the right place at the right time. As its name suggests, Taiwan Semiconductor Manufacturing makes semiconductors. It's not of the same stature as powerhouses like Intel, nor as diverse as Texas Instruments. Its wares are an increasingly important part of the world's technology, however, like its wearable solutions. The company's spot platforms only require a fourth of the voltage needed for conventional circuitry to function, for example, allowing for new and better functioning wearables. That being said, Taiwan Semiconductor is a hot pick at this time, mostly because it's not just a beneficiary of chip shortage, but an escalating battle for data center supremacy among major chipmaking names. AMD just tapped the company to manufacture its Milan data center processor, for instance, which is a jab at Intel's piece of that fast-growing market. However, newcomers are going to pay a steep price. The stock's trading in excess of 30 times earnings and nearly 12 times its sales. Both are valuations that make some investors nervous and other investors downright bearish. With earnings projected to reach $3.97 this year, up from last year's $3.39, en route to $4.57 per share next year, the growth potential may be worth the cost. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.